80% of the food consumed in Asia and sub-Saharan Africa is produced by smallholder farmers, each tilling on less than 2 hectares of land. For all farmers, knowing when annual rains will arrive is critical. Yet with the increasing impact of climate change, the timing and amount of rain are becoming more and more unpredictable. It can take just one season of bad weather to tip smallholder farmers and their families into poverty. Insurance is one way to protect against the risk of crop failure. Traditional insurance compensates farmers based on actual damage assessed after an event. When the harvest is not good, farmers receive payments from the selected insurance company. In the Philippines, it is estimated that less than 10% of farmers have access to crop insurance. One of the reasons is that the products are not very attractive to farmers. Even when the harvest is bad, it often takes many months for an agent to verify damage and for payments to be made. By the time the farmer receives payment, the cropping season for the year is over. Weather Index-Based Insurance, or WIBI, is an alternative form of insurance. It is designed to protect a larger number of farmers and potentially revolutionize their access to insurance. Instead of payment based on verification of damages after an event, payment under WIBI is tied to a factor closely correlated with yield loss, but easier to monitor, such as rainfall. Here's an example of how it works. In the Philippines, a common rice variety grows in 120 days in 3 stages: vegetative, reproductive, and maturity phase. In each of these phases, there is a minimum water or rainfall requirement below which the plant starts to wither. Under WIBI, if rainfall is lower than the threshold, farmers automatically receive payment. A key advantage of WIBI is that compensation payments to farmers can be provided much faster because it is based on an independent observation of rainfall, not on the measurement of the damage to an individual farmer's crops. With faster payments, farmers can restart their farming activities in the same cropping cycle. WIBI isn't just advantageous for smallholder farmers. It could also be cheaper and easier for insurance companies as they don't need to verify actual damage. This may make the product more affordable for farmers. In the Philippines, the Philippine Crop Insurance Corporation, in partnership with the United Nations Development Program, introduced and tested WIBI. More than 2,000 farmers were covered under the scheme, with 178 farmers receiving payments. The time it required to make payments was about 5 days. However, there are still a number of factors preventing WIBI from being scaled at the national level in the Philippines and other countries. First, WIBI can cover only a single weather event that demonstrates a strong correlation with yields, such as rainfall. Losses farmers incur from pests and diseases, which are equally important causes of crop loss, cannot be compensated in the same contract. Second, the concept of WIBI is still foreign to many farmers, and efforts by insurance companies to raise awareness about the product may be very costly. Despite these challenges, WIBI offers tremendous potential as an instrument for safeguarding farmers in a climate that is increasingly unreliable.